But where did Dave Ramsey make all of his money? Not from the stock market. No. He made his money. Guess what I said January 17th, 2024? If rates stay higher longer, which of course that's what's been happening, right? People might just say,
Chris Miles was able to retire twice by the time he was 39 years old. But he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to the show. It's for you, those that work so hard for your money, and you're now ready for your money to start working harder for you today. You want to become work optional, where you work because you want to, not because you have to. And you not just want to get rich, but you want to live a rich life so you can do what you want with those you love and create a greater ripple effect in the lives of others. Guys, thank you so much for tuning in today. Thank you for binging and sharing on our episodes. You are the reason we're doing this today. By the way, if you haven't done so already, we have two YouTube channels. So there's obviously the Money Ripples channel, but there's also the Money Ripples Shorts channel that has our podcast and everything else that we're putting on it as well. Be sure to check that out to get more of this great content today. Okay, guys. So of course, like every once in a while, I've got to bring up my good old buddy, Dave Ramsey. Now, remember, this guy is a good guy, right? He is out to help people. I believe that's the case. I don't know him personally to say that he has malicious intent or not, but I'd like to assume the best in people. I like to assume he's definitely not that way. But here's the problem I do have is how many of us are listening to people, gurus like Dave Ramsey, and we're already really late to the party, right? And here's why. Let me show you this article right here. Okay, so this article came out last month. This is actually on thestreet.com, where he says, now is the time to buy a house, right? And this is dated, you see, the end of April. This is the end of April here. So this is about a month ago. Now, what's interesting is he's taught, Dave Ramsey, of course, the author of The Ramsey Show and the host and all that kind of stuff, right? He says this right here. He says, the housing market's heating up with more homes for sale, but there still aren't enough to meet demand. So prices keep climbing, he wrote there, right? And so they start talking about the month over month. Now, this is what's interesting. They're talking about the month over month median price from February of 2024 to March rose 2%. So that means they went from gained about a $10,000 equity gain in the last month, right? Also, the interest rates have been rising too. So despite that double whammy, here's the thing, is that his email that he of course talked about all this stuff, right? He explains that high home prices are going to keep happening, right? So he says, if you're ready to buy, now's the time. Because what he's predicting, prices are going to keep going up. Here's the problem, guys. I don't know how long you've been listening to the show. Maybe you just joined us for the first time, right? But he's talking about this right now. Do you recall an episode back in, let's say to be exact, January 17th of this year? And by the way, this podcast was the second time I had alerted people about this. But there was an episode called the real estate opportunity that the media hasn't figured out yet. So that's why I titled it. So this is over 3 months prior, and I actually recorded this prior to that. So I really recorded this closer about 4 months prior to Dave Ramsey writing this article, right? To having this article on the street that all of a sudden became big news. We're saying, now's the time to buy. Interest rates are going up, but prices are still going up. This is the time to buy. Guess what I said January 17th, 2024. I said, now's the time to buy investment properties. It could be buying your own house, but I said, now's the time to buy. And I said, the media is going to start talking about this in the spring to summer later this year of 2024. And you can go back and listen to it. That's what I said. And just so you know, I also said in that episode that you weren't the first I told, because people that are our paying clients, I told them back in December. So I told them, really, it was like beginning of December when I talked about this. Probably by the time I actually recorded that for everybody, it was mid-December, like second week of December. So second week of December till when Dave Ramsey talked about it, that's 4.5 months. And I said, be prepared. Now's the time. If you're going to buy real estate, it's the best time. Rates were actually lower up until about February. Rates were lower. prices I predicted would go up higher. Now, I did predict they would go up more because I thought that the rates, if as long as they stayed lower, which they haven't lately, I said you'll probably see a huge bump because just from those rates dropping over 1% from the fall to the winter time, that allowed at least 5, 6, 7 million home buyers that are now eligible for properties that weren't back in September, October, because rates were higher back then too. Now we're starting to creep back up. Now, of course, I'm pre-recording this a month ahead of time, right? I'm pre-recording this really just a couple days after this article came out, just because I'm going to be out of town for a few weeks. So it's possible rates could drop and correct a little bit again. But as of the time I'm recording this at the end of April, we're seeing rates back up over 7% again. If those rates go back down below 7%, I can guarantee there's going to be a huge mortgage application rush. More people are going to be going in, right? There's going to be a lot more rush and more people buying properties. Now, I'm not saying somebody's entire portfolio should be buying properties, right? I think it's definitely one of this. It could be, if you're doing it right, the safer way to go, right? This is why I talk about turnkey rentals. And I had other episodes come out later about that very thing because I knew that this would be the great opportunity in those key months to buy before the springtime, which is where we are right now. Prices could still definitely go up. There's no doubt. The pent up demand has been happening. It's just like 2020 when you couldn't buy a car or even a used car for that matter. So people are begging for it, driving the prices up. RVs, they're in high demand, drove the prices up, right? Here, you're going to see the same thing where real estate people have been holding back, staying in their homes longer because they have lower interest rates and they don't want to move. But what happens when people say, well, I've got to move. I changed jobs in the meantime. I'm downsizing. I don't want to spend as much. Hey, I've got equity in this house. What do I do with it? Could I move it over somewhere else? There's all these factors that are going on right now that people are reconsidering either moving and or even refinancing their houses too, which could also affect some things as well. That's where we are today. Now, rates, of course, come back up since February. They've come skyrocketing right back almost to where they were in the fall. That's a big sign. Now, if the rates and the price have still gone up, now I'll tell you this. Again, by the time you hear this, it might be late to the party, right? But you'll probably see more data coming out saying that things have slowed down the housing market, for the month of April, which hasn't been announced yet because it's still April when I'm recording this. It'll be May. You'll hear it next month. So they'll probably talk about how it's slowed down. Mortgage applications have slowed down, which is all stuff that my friends in different markets around the country are saying. Doesn't mean that prices are going to go down. It just means that things have slowed down, that offers now are taking a little bit longer because people are saying, ooh, do I want to lock a rate yet or not? What do I want to do? So people might be holding back a little bit. However, if rates stay higher longer, which of course that's what's been happening, right? People might just say, I don't care. I have to make a change now. This is the year. Do it now. Maybe I'll just refinance later if rates come down, which is definitely a good strategy to do potentially. So that's what we're seeing right now. But my point is this, guys, is that if you are trying to listen to Dave Ramsey now, you are already late. The media is always late. They're always late to the party. They're always giving you information way beyond the time when it happens. Like I said, it doesn't mean that you can't buy real estate now. It doesn't mean this is a bad time to buy. There's still good opportunities in different markets where it's still okay. Like prices haven't skyrocketed. You can still get good rents. In fact, rents are still climbing quite a bit lately, which is helping offset these higher prices, right? And even higher interest rates too. But that's the thing you've got to be aware of is that the media is not paid to be right. They're not paid to give you good information. They are paid to get you to click. They are paid to get you to read their stuff or to watch their videos, to stay hooked on their stuff. Because the more that you're hooked on their stuff, the more they can charge sponsors to stay for them to be able to get that airtime in front of your eyeballs. So they make money off the sponsors, not off of whether or not the news and the information is any good, right? This is why I don't listen to Jim Cramer, Mad Money. The guy is a quack, right? Complete entertainment value. Dave Ramsey, entertainer. All these people you see in the media are really just entertainers. They're not real people giving real advice. Now now granted, yes, they're human. I know that they're real, right? But the truth is that they're not worried about giving you great advice. They are purely worried about whether or not they get you to do what they want you to do. And sometimes it's good to some level, and sometimes it's bad. Just be aware that this kind of mentality, this kind of thing where media and all these guys out there are trying to teach you stuff, it's supposed to be good. I mentioned Jim Cramer, Mad Money, right? You know what's funny is that he was saying buy Bear Stearns right before Bear Stearns crashed. Here's the truth. Most of these people, and even by the way, Jim Cramer actually, if he's still doing his routine he was doing years ago, he would wake up at freaking like 3:30 in the morning. He would start reading stuff. He would start like getting information and news from whatever sources to then be able to share on there. He was doing his homework. Yet he was still wrong a lot of the time. In fact, the one thing that's interesting is that many of his stocks shot up and would, the ones he'd pick is only not because they were good, but because he said it, people jumped in. It created a self-fulfilling prophecy. The stock price would rise because all these people would watch Jim Cramer Mad Money and then all of a sudden jump in, make the stock go up. So I would teach my stock students when I used to teach people how to trade stocks and options, don't trade on hot tips. But if you want to make quick money from a day trader standpoint, whatever Jim Cramer says, then get in really quick and then get out really quick. Don't ride it, don't do anything. Just ride that little quick initial rave before all of a sudden people get to their senses and say, wait, this is bad advice. Crash, right? That was the kind of thing I would say. Dave Ramsey, what's crazy is this. He's, again, an entertainer, a personality. He claims to be a financial expert. And hey, he has great net worth. But I want you to question this. And this is what you should be questioning everybody, including me, is where do they make their money? And are they honest about it? Dave Ramsey tells you one thing, but then does another. He tells you you should be putting your money in stocks. You should be debt free, right? Debt free, do stocks and mutual funds, and then you'll be free the rest of your life. Problem. Why are those people that are following his advice coming to us saying, I just did it, it didn't work. Now what? And now I have less time to make up for that mistake that I just followed his advice. Why? Because the stock market doesn't do as well as you think it does, right? I've got another video that talks about what the real rates of return of the stock market have been and why that actually like really got me soured on the whole stock market. Not to mention high risk to get mediocre returns is not my idea of good investing. That's just gambling. I'm riding waves. But he's telling you to do that. But where did Dave Ramsey make all of his money? Not from the stock market. No, no. He made his money from business first and foremost. When he was recovering from bankruptcy, he was giving financial counseling and advice, right? Making money from business. And then secondly, from real estate. Now, do I have a problem with this? Absolutely not. I don't have a problem with him making money from helping out people on the financial counseling end, nor do I hate him for making money in real estate. In fact, I support it. What I don't like is that he tells you to do one thing that didn't even work for him. He went and did something different. He made wealth and money that way. You think if you follow his advice to do it, but he's not giving the advice he gave himself. Why would you follow that? Do what they do, not what they say. This is just like your parents, right? Like, do as I say, not as I do. No, that's called a hypocrite. You do that. Now, how many times have I talked about creating value, adding value in your business or in your job? That's your economic engine. Your main primary source of income is your economic engine. That is your number one investment. And then secondarily, as you start to accumulate some of that, you want to create passive income by investing in other vehicles, just like I've done in my own life, just like I've had other people do in their life too. We try to stay congruent with that message, right? That we say what we preach, we do what we preach. We practice what we preach, right? We do the same thing that for ourselves that we have others do as well, that we teach them of how they can do it too. That's it. That's the way you should be. Susie Orman, another great example. Now she's gone more vanilla on her advice. It's become very much about, her, I think it's because her audience is aging. So she talks a lot about Social Security, retirement, saving your 401ks, that kind of stuff, right? And then basic money management. But you know what's fascinating with that is that Susie Orman, you actually look up information about her. She has very little money in the stock market. She has a lot of money in bonds, a lot of money in real estate. Once again, very little in the stock market. The stock market could crash. Even she said, I could lose all my money in stocks. It won't matter. I'm fine. Why? Because her business, her profile, her entertainment value, right, that she does on media, that's her primary investment. That's her primary moneymaker. The stocks, nothing. Even the bonds and the real estate she has, that helps give her some additional streams of income. But that's it. Again, she's giving advice that she doesn't even really take herself. Why follow that? That's my promise to you guys, is that I'm going to give you advice that I actually follow, right? I'm not going to sugarcoat it for you. I'm not going to go and try to sell you something I don't do myself. I teach the very things that I do because honestly, I can't teach. I can't BS well. I can't teach you something I don't know about. And I definitely can't tell you to do something that's not worked for me or for other people, because that would, to me, is just dishonest. So, anyways, that's my rant about the media. Be careful who you listen to. Be careful who you follow. Follow those that have been there, they've done that, and they're still doing it today. That's the advice you want to be able to follow. If you have more questions, you can definitely follow us at moneyripples.com or reach out to us and contact us. But guys, if we can support you anyway, let us know. Go and have a wonderful, prosperous week. We'll see you later.